Hello, everyone. I want us to pick from where I left in our last class. And I had explained the various transactions that are supposed to be held in both the revenue account and the balance sheet, or statement of comprehensive or statement of financial position. And I said the very important thing, we have an illustration here. And as you can see, the very first thing that's appearing at the top there, that's the life assurance fund. And this fund at the beginning of the period is shown on the credit side of the revenue account. And then from there, we have the premiums. And we say that these two are the key, because premium, the premium received during the accounting period needs to be added to the outstanding as at the end of the previous period, accounting period. If there is any bonus in the reduction of premium, is also supposed to be added. Then you are supposed to subtract any outstanding premium at the beginning of the period. But remember, we say that this figure will be minus the reinsurance premium. So that is what we have. Look at the question that we have for All People's Assurance Company Limited. Whenever you see such a question, the very first thing is to prepare the trial balance. Of course, the trial balance will be a quick check on whether the books as they are, whether they are going to balance before you even adjust anything. You've been asked to prepare a revenue account and the balance sheet after taking into account the following adjustments. So the very first thing is to prepare the trial balance. And trial balance is just debiting what ought to be debited and crediting what is to be credited. So allow me to copy paste this one. We work from the Excel sheet. So here we are. I have copy pasted the items as they are. But what I'll do, I'll want to, you say the very first thing is to make this a trial balance. Let me see, to avoid losing any figures, let me just work with that trial balance. We said the basics of accounting stands. So you will debit what, not debit, the topic is supposed to have 3 lines. Of course, this is all people's. Let me see what I'll do. Then I can center line. Trial balance for the period ending, but my question doesn't have a period. So on this side, I'll have the account to be debited, DR, and then I have the account to be credited. So what I'll be doing, I'm not adjusting any figures at this point. But what I'll do is to credit what ought to be credited and debit what is supposed to be debited. So I have the life assurance fund. We've said that this figure is supposed to be credited at the beginning of the period. Then I have the claims by birth. Claims by birth, we have the claims by death. Claims by death is supposed to be debited. Then we have claims by maturity. Those are debit because these are expenses. Then we have premiums. Premiums are supposed to be credited, correct? Then I have the expenses of management, the expenses. So I'm supposed to debit them. Then I have the commissions. Commissions are supposed to be debited because they are expenses. Then we have the consideration for annuities granted. And we said consideration for annuities, I'm not very sure whether I'm seeing my fonts are not friendly to the eye. Let me make them 12 or 11. 11 is better, right? For purposes of the eyes. I think that is better now. So here we are. So we've said for the consideration for annuities granted, we say that any lump sum payment that will be received by the insurance company in lieu of granting annuity is what we are calling the consideration for annuity granted. And it's supposed to be shown as an income on the credit side of the revenue account. And so is the trial balance because it's an income. So I'll cut this and paste it on the credit side. Very well. Then I have interest, dividend, and rent. Again, these are incomes, so I'm going to credit them. Then I have income tax, an expense. I'm going to debit. Then I have surrenders, an expense, debit. Then I have annuities. Annuities are an expense, so you are going to debit them. So we said that annuities, that is the periodic payment that will be paid every month. Then we have bonus paid in cash. Bonus paid in cash is an expense, so we debit. Then I have bonus utilized in reduction of premium. Bonus utilized in reduction of premium, an expense. So we are supposed to debit. Then I have preliminary expenses. They are expenses. Let me just paste them. Then I have claims admitted but unpaid at year end. I have claims admitted but unpaid at year end. Claims admitted but unpaid at year end. These are claims, therefore supposed to be credited. So on the credit side, we are going to adjust them in our revenue account. Then I have the annuities payable. Annuities payable will also be adjusted in the revenue account. They are supposed to be credited. Paid up share capital. The capital, all capital items are supposed to be credited. Then I have government securities. This is an asset. It will appear in the balance sheet. Then I have the sundry assets. The assets. So supposed to cut and paste here. So sundry assets are in the right place. Then I have fines for revising lapsed policies. Fines for revising lapsed policies. Again, we'll adjust this. So they're supposed to be on that end. So I think there we are. You're supposed to check whether our trial balance will balance. Can add all this. I'm getting 2246. I put a formula is equals to the sum of these items from here all the way to here. So this will be also the sum of all these items starting from the life assurance fund to that point. Wow. So our trial balance has balanced, right? You can see our trial balance has balanced. So as balance at 2246,721. So the other information that we've been given there, let me see. We've been told down there, claims covered under insurance. We have 10,000. These are claims by death. They are annotated there. Then further claims that are intimated of 80,000. They are also there. Then we have further bonus utilized in reduction of premium of 1,500. So we will add the premium, which is 25 in the revenue account. Then I have interest accrued of 15,400. It will be credited. And I have the premiums outstanding of 7,400. Again, this will be credited. So we don't have much. So allow me to go back to the question, to the trial balance, sorry. So here we are, and we start now preparing our revenue count. So this is the trial balance. I'll do the revenue account here on the side. So revenue account. I'll have to merge these all people revenue account. So revenue account, we indicated, or I shared the format. The format is in the bottom of how the revenue account is supposed to appear. And I advised that we'll be using the vertical format and not the horizontal or the capital T enlarged. We'll be using the vertical format. So let us start. These amounts will be in shillings. So you start with the life assurance. I'm doing this in the interest of time. I need to. So I have the life assurance fund. The figure is 1470. So brought forward. Then I have the premiums. We have the premiums of 210,572. Or we say this needs to be adjusted. And we say that this is the real part. So the first thing will be to add the we add in the premiums that are outstanding, and you've been given the premiums that are outstanding in our question as 7.4. So outstanding premiums, here 7.4. So we are adding. Then I have the bonus utilized in reduction of premium. So we are going to add bonus utilized and reduction of premium. Let's put this on the other side. This is Calibri 11. Use the same font. So I've added the bonus utilized in reduction of premium. The amount is also these two rows. I can convert them into money. It is 1.5, right? 1.5. So you add all this, we are getting 219,472. 219,472. Go on. The next item is the consideration for annuities granted. Consideration for annuities granted. And the consideration for annuities granted, change everything here to Calibri. Let's work with Calibri. So for annuities granted, this amount is 10,620, right? 10,620. Supposed to be on that column. Then the other item that we have there is the interest. So these ones I'm just picking as the year. You can see how easy it is when you have arranged them in that manner. And our interest rate and copy. Refusing. So 52,461. The next item is on the interest. We had some accrued interest, right? In the additional information, we have accrued interest, and our accrued interest is 54. Interest accrued. Accrued interest 15,4. If you add the two, should have indicated here I'm adding. If you add the two, get 67,861. 67,861. We go on. Then the other item that is appearing in the list, I have all these are credits. So I have the fines for revising the the lapsed policies. And this is 92, right? So those are the items. I'm trying to counter check whether I've left any other item. These are items of the balance sheet or the statement of financial position. So they won't appear here. So there we are. So I can get the totals. And this will be our balance in figure. So the sum of this $17,686.07. So we go to the credit side, and on the credit side, we are supposed to deal with the claims. So kindly note that this will be our balance in figure. I need to double underline it. So there we are. We go to the other side. So you start with the claims. And I have the claims by death. And just copy paste this. And the claims by death are 76,980. Then I have the further claims that were intimated. We have the further claims that were intimated. They were 80,000. We can add further claims intimated. So I'll add the 80,000. The further adjustments. I have again what was covered under insurance. So I'm going to less claims covered by reinsurance. They are 10,000. So I'm subtracting this, put them in the bracket. Anything else? Then I have the claims by maturity. It's here. I'm supposed to add claims by maturity. Let me indicate here I'm adding. The amount is 56,420. So I'm adding the claims by maturity. I add all this. I'm getting 131,400. 131,400. We go on. So the other figures, I'll just pick them as they are. Surrenders, annuities, bonus in cash. Copy. Paste. The amounts are not changing. So I copy, I paste. What else? $94.50. I had a bonus somewhere. Yeah, in the addition information, we had the bonus utilized in reduction of premium. So we are adjusting this figure, reduction of premium. Remember, this was 2.5. We are adding the 1.5. We are adjusting this figure. So you'll get 4,000. That is adjusted. And I have expenses. We have commissions of 26,541. Commissions 26,541. Then I have management expenses of 19,890. Then I have income tax of 3,060. We had adjusted everything, so the other items that are remaining, we are just handpicking them. Anything else left? This will go to the, I think we have adjusted everything. So these are our balancing figure. So you need to get the difference. What is not happening? Undo. So I need to get this. This is 245,621. 245,621. 245,621. So my life assurance is the figure that we'll be taking to the copy, carry forward. Remember, this was a brought forward. So you have a carry forward or a carry downward. That will be the balancing figure. So I can indicate there carried forward. It will be equal to this amount is equal to this minus this, because you are balancing off. So it is 15, it is 1,522,986. So that we add all these to get there is equal to sum of all this. Those are balancing figure. So there we are. So I can delete this and do, I can make this bold. So that's how our revenue account basically will look like. So what you need to know is that the balancing figure is the amount that we normally take to the balance sheet. So this is the amount that we were interested in. And this is the, remember you said that in the life assurance business, we do not report profit. Rather, we carry forward the life assurance fund because of any eventuality that might necessitate a claim. That's why we had a brought forward here and even indicate it. So this was the balance brought forward from the previous period. So the funds at the beginning of the period are on the credit side. whatever goes now or gives us the carry forward becomes our balancing figure for the balance sheet. We can go to the balance sheet and see how it pans out. So in the interest of balance sheet, I want to see whether I can squeeze it here so that we have everything on one pager. And delete this. So balance sheet. These three. Just need 3 columns. For assets and for capital and liabilities. So the basic conventions of accounting states, we start with the assets and we then pick the, so this is a balance sheet. And balance sheet is old school. So kindly note that the balance sheet is, it's only that we don't have a period, but it's supposed to be balanced at blah, 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 blah. And this was revenue account for the period ending, for the period ending that period. So kindly remember to indicate, because I've said the conventions of financial accounting stays. I'm trying to create extra space, make my work a bit organized. So these are shillings. So shillings. So you go on. I start with assets. And from this list, you can see we have the government securities. So I'll pick them. Government securities. This figure is supposed to be on this side. It's an asset. Anything else? Let me pick the outstanding premiums. But in this case, we are deducting. Kindly note that when we go to the balance sheet, we are going to less the outstanding, these are outstanding premiums. Outstanding premiums, just indicate the SPR. They are 7.4. The figure is not changing. Need to convert these columns into money. This is money. There was an amount due of, let's see, the accrued interest. So this will be our amount due for insurance. So let me just indicate them as amount due. This figure here, don't even need to write less. Supposed to add is an asset. So amount due for insurance. It is 15.4. Then we had an outstanding These are preliminary expenses. Remember the outstanding. So outstanding interest income will be a current asset, right? Isn't it? Yeah, this will be a current asset. Just need to frame it. Should be outstanding the amount due for insurance was, I'm mixing issues. So this is supposed to be 10,000, sorry. The outstanding interest is the one that is more alone in this one. The one that is 14,4, 15,4. I go on. So I have the outstanding premiums, the amount due for insurance. I have the accrued interest, it was 15,4. Then I have I was taking the preliminary expenses. Payments are supposed to be assets. Then I have some other assets here down here. I have the sundry assets. Here amounting to 549,110. I'm trying to peruse through to see whether I have any other asset. Means we don't have any other assets. Only that. I can sum them. So I'm getting 2,033,400. This should be our balancing figure. I can put it in bold. Then we go to capital plus liabilities. I have the share capital. It's 400,000. Just say share capital. Let me remove the paid up. So share capital. Then from there, I have my life assurance fund. Remember, this is the figure that we were looking for when we were preparing for the revenue account, 1522,986. Then we add any claims that were admitted by the year end. So I have the claims admitted, but they are not yet paid because they are liabilities. So I have them here, but unpaid. They are 80, 0.34. Then I had the adjustment of the 8,000, the claims that were intimated, these ones. Were 8,000. No, they were intimated, they aren't yet paid. So that we get now the, see, this is 88,034. This is the total liability. And then we had the annuities that were due but not paid. So a liability, yeah, 22,380. I think that's all. Let's see. Brilliant. So our balance sheet has balance. Well, in the exam, you are asked to attempt. Don't try to waste a lot of time trying to do it, to balance it. Ideally, it should balance, but under the whole tensions of exam environment and everything, it's very unlikely that it will balance. So there we are. Any question? So I'll share this working for your reference. And that was how you are supposed to deal with the books of All People's Assurance Company.